For under 30, and today we're talking about a name that has had quite the fall from grace. We're going to focus in on the cannabis space, which at one point was the space within financial markets. We're talking Tilray. The stock is about 1/60th of what it was at its peak. Granted, it traded there like, one trade at $300, but it's $5.20 stock here at current levels. That's 1/60th of its peak.
And down 4% today, down about 14% for the week, Alex. And there was once a time when these cannabis stocks were some of the hottest in the market. I mean, there was sort of a lot of hype around them, and I think the federal legalization. Now, of course, weed is legal in Illinois, but I think the problem is all of the other states where it's not, and I think that's been a problem for the sector as a whole. But we did get some news, actually, that Thursday they finalized a partnership with HEXO that will include a new debt financing agreement where Tilray actually agreed to acquire about $211 million of senior secured convertible notes at about a 95% of face value. So this brings two of Canada's top cannabis makers together in a deal, but this was not received very well by the street, as we are seeing some weakness this week. So to tell us more on this deal and this name and really its fall from grace is George Tsillis, TD Ameritrade Network contributor. And George, I have a lot of friends that were very interested in the pot stocks, but they have completely fallen out of favor, to say the very least.
Yeah, at the very least, they're up in smoke, no pun intended. And I think at 1/60th, Alex, is that like 98%? Because that's what I got a calculation from. That's about a 4-year decline for Tilray. Look, I think overall, you got to consider some of the challenges that are going on with the marijuana business. We saw, of course, regulatory approvals from the state level, not necessarily across the board on a federal level. That, again, was very bullish for a lot of these names back in 2018 and 2019. But since then, there's been a lot of competition in this particular area of the marijuana space. If you consider some of the things that are going on with Tilray, they bought a company called Aphria. They're also now looking at some sort of a financial partnership agreement with HEXO. They actually need it. And the reason being is if you look at Tilray as a business, it is actually in serial decline, not just in price, but last quarter they reported a decline in sales, a decline in market share, decline in gross margins, and effectively that speaks towards more dilution. And I think that's what's been going on here with companies like Tilray, because of the fact of the matter is that there's really no standardization. This is the biggest challenge in the marijuana space, whether it's medicinal, whether it's recreational. There are so many different kinds of products, so many different producers. There's no barriers to entries, and there's no scalability. And all of these actually add up to a serial decline in a stock price that we've actually denoted in Tilray. So the partnership with HEXO is certainly bullish when it comes down to expectations. It has to manifest into something concrete. Canaccord upped their price target on Tilray to $9. But you also have to keep in mind that you have to look at what's going on from a competitive landscape, and that's again one of the challenges with the marijuana business in general. I mean, demand is growing, the market is growing, but so are the number of competitors in this industry.
George, first off, sometimes the fall from grace is just a fall from astronomical, unbelievable prices to maybe something that's a little bit more realistic. And I think we've seen that maybe a little bit with some of these pot stocks. But, I don't feel as though I'm an expert in this space. I think it's complex. I think there's a lot of things that are still unknown with it. So what I try to do is find other industries, other companies doing different things that I can find somewhat comparable. So one that comes to mind I'd love to get your thought on and where these comparisons kind of land for you is something like Jenny likes, which is Beyond Meat and this kind of vegan meat alternative, and where they were once really much in the spotlight. Have hurdles, of course, with traditional meat. And then something I'm in tune with, which is something like online sports betting. And they, of course, have clear connections here with legalization hurdles, new entrants, but then, of course, legacy players that already existed. And, of course, this scalability and limited barriers to entry. So that space makes more sense to me, but I can see how some of the same things apply to Tilray and its peers as well.
Yeah, look, these are different industry groups, all subject to changes in regulations, at the state level primarily. But I think at the end of the day, you have to think about barriers to entry. If you just look at, for instance, Beyond Meat, now the challenges for that company are is that brand itself enough to sustain its pricing power? And that's not the case. If you look at companies like Cisco, which is the food company, ConAgra, just to name a few, Nestle, these are all companies that are actually encroaching. Kroger, Walmart, through private label brands, are encroaching on Beyond Meat's business. So, it comes down to brand recognition. Does Tilray have enough of a brand recognition to sustain pricing power? And again, is the product standardized? And the reason standardization is extremely important is because that improves the scalability on a per unit production basis. And so there's so many different types and brands and ways, of course, to utilize the product, and so many different competitors. You can't get pricing power. And I think that's one of the structural challenges with the marijuana space. That's not to say that the marijuana business is not growing, which it is. It's just growing very rapidly, but there's so many different competitors that it's tough to gain scalability. And again, you also have to think about the jurisdictional barriers to deployment of product. And that is also some of the challenges for these companies. So you got to go with the trends. The trends are still down, unfortunately. And you also have to think about, just because you legalize the product doesn't necessarily mean that everyone's going to go out and use it. And that's another thing you have to keep in mind when considering an investment in a company like Tilray.
George, that's exactly pretty much what I was just going to ask you. Do you think there's also still just this perception problem that oftentimes some of these cannabis companies get sort of filtered in to this sin stock space, which also has like tobacco, alcohol, potentially sports gaming, although I think that's maybe more normalized. But oftentimes some of these sin stocks, I think people just think this is a fad, this isn't here to last. Although I do have to say that actually having cannabis be legal in Illinois, I think has been a positive thing, but we're just one state. I mean, the 50 states, the federal legalization seems like it's never actually going to happen. In addition to, I think there's still a PR problem for cannabis.
Yeah, I mean, these are, again, other challenges that you have to think about when investing in a company like Tilray. And so, I just think if you just think about, tobacco companies have consolidated over the last, decades or so. And there are fewer cigarette brands, and so they have structural pricing power. That seems to be way off in the marijuana space, and that again is going to be challenging for Tilray and other businesses who continue to basically issue shares because they're burning through cash. So, you can look at it from a legal standpoint or even an ethical standpoint, but I'll just look at it strictly from a financial standpoint and the standpoint of economics. And if you just look at Tilray, I think a market cap is around $2.3 billion. They're burning through about $400 million in cash per year. And so doing the math, that's about a sixth of the share price is going to be gone up in smoke, no pun intended once again, every single year, which means it will go down. And of course, to offset those declines in cash, they're going to issue more shares, which is another pressure that the stock price will face.
Yeah, George, it sounds like they got to figure it out, and they're running out of time to some extent.
Right.
And I think that pun was intended the second time, George, but I also noticed Jenny intentionally left Beyond Meat out of the sin stocks. I'm not so sure about that, but George Tsillis, have a great weekend as always. Thanks for joining us here on Next Gen Investing.